Euro went up on the back of this migration deal, but what concretely does it mean? Why did it go up? People think that actually the bloc holds together now?
So it is actually a question of probability. So what the market was concerned about in recent days is what would happen to the German government. Now, the probability that this is going to take a more positive outcome that has certainly increased. But nonetheless, we decided this morning to fade this euro upside. So we identified levels of around 116.18, and in euro yen it was 129.20, where we were saying it is better to use this euro advance to get on the other side of the trade, namely on the short side. And the reason why we will do so is that we have to identify what really are the medium-term drivers for the euro. Is this euro really driven by political uncertainty, or is this euro potentially be driven by the outlook on global liquidity and volatility? And that is precisely what our viewpoint is.
But sorry, how much? So how much is that kind of glued to, liquidity factors? How much is it monetary policy?
I think a lot of that depends on what is happening in the US, in particular into the yield curve. When we are talking about liquidity and financial conditions, it is not about that the central bank in the United States is in quantitative tightening, or it is not about that American banks are now much more resilient in increasing its broad money supply. So broad money supply, by the way, is no longer growing as fast as a couple of years ago. Many people have not observed that. But there's a third component in that, and that is when you have a flattish curve in one of the main funding currencies of this world, the US dollar is the main funding currency in this world, then obviously it does reduce the incentive of banks in the United States, but as well outside the United States, to convert shorter dollar liabilities into long-term dollar assets. So that actually means you have less incentive to provide a longer-term US dollar loan. So that is a liquidity contractor. So yeah.
Is the biggest concern for the ECB that because of the cycle, the ECB doesn't actually start normalizing and there's a turn in the US and they're way behind the curve?
Yeah, so what you have is that the European Central Bank is going to take a very cautious view. So they have suggested, okay, the QE thing is getting tapered. So we know all that information, but they gave as well the information out that they have no intention to hike rates anytime soon. So they wanted to be very, very late, very certain when they are going into that process. And therefore, I think what you have seen recently on economic data. So today we got German retail sales. I mean, 2.1% down in a month. That means a lot, right? Yeah. Yeah. And you think about is that going to push the European Central Bank forward or backward? And it is obviously pushing the European Central Bank backward. And that implies that for somebody who is investing in the Eurozone and who may consider to take on a currency hedge, he may do that because he has more planning security, because the European Central Bank is going to sit on its hand for a time being. And that actually means the European Central Bank is going to pay you to convert your position to a lower risk or lower value at risk outlet. And that could mean that the euro is going to get under some selling pressure from here. How much? I think it is going to be maybe 113, not much below there, but for the time being, I think you need to be on the shorter side.